What is going on, everyone? Welcome back to the channel. Today is April 18, 2026, and the market is absolutely on fire with some massive moves happening right now. We have got a Bitcoin proxy stock surging nearly 12%, a streaming giant getting crushed after earnings, an energy major hitting extreme oversold territory, and a crypto exchange riding the wave higher. We are covering all 5 of the biggest movers you need to know about today, with full technical breakdowns, key price levels, and my 3-month price targets. Let us get right into it. Alright, kicking things off with the biggest mover on our list today, Strategy Inc., ticker MSTR, formerly known as MicroStrategy. This stock is absolutely ripping today, up 11.8% and trading at $166.52 as of this recording. Now let me put that in context for you. Volume today is coming in at over 52 million shares traded, which is 2.22 times the average daily volume of about 23 million shares. When you see price and volume moving together like this, that is a powerful signal that institutional money is getting involved, not just retail traders chasing a move. Let us dig into the technicals here because they are telling a very interesting story. MSTR is currently trading at 166.52, which is well above its 20-day simple moving average of 133.15 and its 50-day moving average of 133.60. In fact, the stock has broken decisively above both of those key moving averages, which is a classically bullish technical setup. Now the RSI is sitting at 79.8, which officially puts us in overbought territory. Anything above 70 is considered overbought, so at nearly 80, we have to be aware that a short-term pullback is possible. Here is what I want you to keep in mind though. MSTR is essentially a leveraged Bitcoin proxy. The company holds billions of dollars worth of Bitcoin on its balance sheet, and when Bitcoin makes a big move, MSTR often amplifies that move significantly. That explains why there is no traditional PE ratio here. This is not your typical value stock. You are buying exposure to Bitcoin through a publicly traded corporate wrapper. Looking at the 52-week range, MSTR has traded as high as $457 and as low as $104. So even after today's big move, we are still sitting closer to the lower end of that annual range. The 6-month high was $301, meaning there is still significant room to run if Bitcoin continues its momentum. My key support level to watch is $133, which aligns with both moving averages. Resistance I am watching is the $200 psychological level, and then up at the 6-month high around $302. Moving on to stock number 2, and this one is going to sting for anyone holding it. Netflix, ticker Netflix, is getting absolutely walloped today, down 9.72% and trading at $97.31. This is one of the biggest single-day percentage drops we have seen from Netflix in quite some time, and the volume is confirming the severity of the sell-off. Over 125 million shares have traded hands today, which is more than double the average daily volume of about 59 million shares. That volume-to-average ratio of 2.13 tells us that big institutional players are actively selling into this decline. So what is driving this move? Earnings disappointments in the streaming space have been punishing stocks severely in this environment, and Netflix appears to be no exception. When a name with a PE ratio of 31.49 misses expectations, investors re-rate the multiple quickly and you get moves exactly like what we are seeing today. Now let us look at where the stock sits technically. At 97.31, Netflix is just below its 20-day moving average of 98.15 and above its 50-day moving average of 91.95. The RSI has come into 57.1 from what were likely elevated levels, so we are not in oversold territory just yet. That 50-day moving average around 91.95 is going to be a critical support level to watch. If buyers step in there, you could see a bounce. If it breaks below that level on volume, the next major support area is down near the 52-week low of $75. The 52-week high was $134 and change, and the 6-month high was $124. So this sell-off has taken a significant chunk out of what was a nice uptrend. For longer-term investors, the key question is whether the business fundamentals support this valuation at these prices. A PE of around 31 in a volatile macro environment is not cheap, but it is not egregiously expensive for a dominant streaming platform either. I would want to see stabilization near that 50-day moving average before getting aggressive on the long side. Number 3 on our list is Lucid Group, ticker LCID, the electric vehicle manufacturer, and this one is in serious technical trouble. The stock is down 5.19% today at $7.30, which is essentially right at the 52-week low of $7.23. Volume today is about 30 million shares, slightly above the average of 28.5 million, so we are not seeing a massive capitulation volume spike just yet. Here is where it gets really interesting from a technical standpoint. The RSI on LCID is sitting at 29.2, which means this stock is firmly in oversold territory. Remember, anything below 30 on the RSI is considered oversold, and at 29.2, we are right on that boundary. Historically, when RSI gets this low, it often precedes at least a short-term bounce or relief rally. But here is the problem with purely chasing an oversold signal on LCID. The stock is trading at 7.30, which is significantly below its 20-day moving average of 9.22 and its 50-day moving average of 9.76. That tells us the intermediate trend is firmly down, and the path of least resistance remains lower. The 6-month high was nearly $20, so the stock has lost more than 60% of its value in just 6 months. For a company with no PE ratio and burning through cash to scale EV production in a very competitive and capital-intensive industry, the risks here are elevated. I would classify this as a speculative watch situation. If you are a risk-tolerant trader, the oversold RSI near the 52-week low could set up a short-term bounce trade back toward the $9 area. But for most investors, I would want to see a fundamental catalyst before stepping in front of this falling knife. Stock number 4 is Exxon Mobil, ticker Exxon Mobil, and this one is setting off every oversold alarm I have got. The stock is down 3.65% today at $146.44, with volume of nearly 29 million shares, which is 1.49 times the average daily volume. So we are seeing above-average selling pressure in the name. Now let me give you the headline technical number right away. The RSI on Exxon Mobil is 17.8. You heard that right, 17.8. In my 2+ decades of analyzing stocks, readings below 20 on the RSI are extremely rare for a blue-chip megacap company like Exxon. This is one of the most oversold readings I have seen on a company of this quality and size. Historically, RSI readings this extreme and strong businesses have often marked intermediate-term bottoms. Let us look at the moving averages. Exxon is trading at 146.44, which is below both its 20-day moving average of 159.44 and its 50-day moving average of 154.61. The stock is well off its 52-week high of $176 and has been in a significant downtrend. The energy sector has been under pressure with concerns around global oil demand, recession fears, and tariff-related uncertainty weighing on commodity prices. However, here is the bull case. Exxon has a PE ratio of 21.82, which is not unreasonable for an integrated energy major. The company generates substantial free cash flow, maintains a strong dividend, and has a world-class balance sheet. With a market cap of over $608 billion, this is not a company that disappears overnight. The 52-week low is $101, so there is downside if energy markets deteriorate further, but the risk-reward at these deeply oversold levels for a long-term investor starts to look increasingly attractive. I am watching $140 as key support and $154 as first resistance. And our fifth and final stock today is Coinbase Global, ticker Coin, the largest publicly traded cryptocurrency exchange in the United States. Coin is up 3.25% today at $206.33, riding the same crypto wave that is lifting MSTR. Volume is coming in at about 15.6 million shares, which is 1.37 times the average daily volume of 11.4 million, so we are seeing solid above-average participation in today's move. The technicals here are bullish but also warrant some caution. Coin is trading well above its 20-day moving average of 179.88 and its 50-day moving average of 180.19. The stock has broken out above both of those key levels convincingly, which is a positive sign. However, just like MSTR, the RSI is elevated at 83.8, which is deep into overbought territory. In fact, Coin's RSI is even higher than MSTR's 79.8, making it the most technically stretched stock on our list today. The PE ratio is 46.26, which reflects the high-growth premium the market assigns to Coinbase as the dominant regulated crypto exchange in the US. As Bitcoin and the broader crypto market rally, Coinbase benefits from increased trading volumes, which directly drives revenue and earnings. The 52-week high was $444 and change, and the 6-month high was $361, so even at $206, Coin is still well below its recent peak levels. The bull case here is straightforward. If crypto markets continue their current momentum, Coinbase is a direct and relatively regulated way to play that theme. The bear case is that at an RSI of 83.8 and a PE of over 46, any reversal in crypto sentiment could see this stock pull back sharply toward that $180 support zone or even lower. My key support to watch is $180 at both moving averages, and my first resistance level is $250, then the 6-month high at $361 for the longer-term bulls. And that is a wrap on today's top 5 stocks for April 18, 2026. To quickly summarize, MSTR and Coin are riding the crypto wave, but both are in overbought territory, so manage your risk carefully. Netflix got hit hard on earnings, and we want to see stabilization near the 50-day moving average. Lucid is deeply oversold, but the trend remains down, so proceed with caution. And Exxon, with that extraordinary RSI of 17.8, is screaming oversold and may represent the most compelling risk-reward setup for patient long-term investors on today's list. If you found this analysis valuable, please smash that like button, subscribe to the channel if you have not already, and hit the bell so you never miss a daily breakdown. Drop your thoughts on any of these stocks in the comments below. See you tomorrow.